What is going on, guys? Your boy Rigo checking in with another video. Today we are on video 8. Form 4, we got 8. We're going to be talking about the seller net sheet just because it is a seller's market. So because it's a seller's market, we're going to talk about what you can net, how much you're looking on estimates, what the realtor fees are, what the closing costs are, what other fees you're going to pay in taxes and per diems and all that other good jazz. We're going to go through the entire net sheet, all the expenses, and figure out what you as a seller would net if you guys are selling your house. And this goes out to all the people that are considering selling or maybe on the fence about selling. You guys will get the breakdown and you can put your numbers together, figure out what you would net. And if you consider selling, comment below, DM, comment, text, call, whatever you guys need, reach out to us. We'll get you everything you need to get informed, put your property on the market, and kind of go about that business. Again, if you guys are interested, DM us. If not, seller net sheet will be video 8, guys. And again, we're doing the 30 for 30. So 30 videos, 30 weeks. Every Wednesday, you're going to see a video posted on a real estate topic or something that you guys would like to learn that's involving buyers and sellers. Cool? Let's get right into it, guys. So with the seller net sheet, it's quite simple. I'm going to give you guys a scenario. We're just going to go based off a scenario that we're putting up together. We're going to go on an escrow price. We're going to go on a specific loan amount that we have to pay off, meaning your current mortgage. We're going to go on an estimated taxes in LA County. We're just going to give you a scenario, break it down, work it together, put your numbers together, and follow the same formula. You guys will have a fun time, all right? So diving right into it. Assuming, again, this is assuming we put the property on the market and we got an offer back at $550,000, right? We got a sales price offer at $550,000. Jumping back into your current mortgage, it's very important to look at this number right here because you figure out how much you owe. It could be one loan. It could be two, meaning you have a lien. You have a lien on your house. You pulled the Hero loan. You have a line of equity or something along those lines that you have a second loan on your property that you may or may not be paying on. We add all of that up together. Let's just say you only have your first loan, which is pretty typical. Excuse me. You would deduct that from your $250,000, but I'm sorry, your $550,000. But before we go there, there's a couple of things that we're going to go through so you guys have an idea of what a typical net sheet looks like, from realtor fees to the taxes to all that good jazz. Closing escrow, we're not even going to put a date on there. I'm just going to leave that. But this is what you would typically see. Closing date, the date of escrow that you're going to close your property. Realtor fees, a lot of you guys like to look at that. The commissions. Seller concessions, we'll go through each one of these: taxes, HOA dues, HOA transfers, home warranty, any surveys, and any, credits, realtor credits. This one, I put it at the bottom because I don't like that unless it's absolutely needed to get something done. But we'll get into that one. So going back to the sales price at $550,000, we're going to close in 30 days. A typical real estate agent will charge you anywhere from 4 to 6%. You're gonna hear all across the globe, all across the city, that some agents will do it for 1%, 1.5%. There's always a catch to it. You guys always got to remember that when someone is willing to give you something and not really fight for what they're worth, you got to be careful there. And the reason why I tell you guys is because I see that a lot. I see a lot of 1%ers, 1.5%, and they'll say, hey, I'll sell your house for 1%. But you got to really consider that a lot of times the people that charge you a little more is because they really value their work and they can get the job done. So really balance out and figure out if you want to go with the 1% agent or if you want to go with the 2, 2.5, or 3% agent. Sometimes even 4% agents. Cool? But this is typical. This is the average. Most agents, most properties that are sold go anywhere from 4 to 6%. That's split in half. Meaning whatever the buyer's agent gets, the other half goes to the listing agent. We typically negotiate 6%. That's 3 to the buyer's agent, 3 to the listing agent. That's normal. You'll find 5% as well, 2.5 and 2.5. Some agents will do 3% for the listing agent. Others will do 3 2s, whatever it is. This is the breakdown. Now, the reason why this is important is because now, if we look at that 6% in a number, just so you guys get that quick understanding, take that 6% of $550. It's about $33,000, right? It's a nice chunk of change, $33,000. Why is that important? Because that goes into the expense of selling the property. That's money that you're losing on your equity or that you're investing in your equity to sell your house. Typically, people will see this as a large number. I want to say, don't quote me on this, it's about 94% of properties sold are with a real estate agent. Other people try to do for sale by owner. They get friends that do it or whatever it may be. But typically a house is sold by a realtor online through the MLS and some online platforms in that aspect. Cool. Again, $33,000. That's for the realtor fee. Concessions. A seller concession is any time that, let's say your house is not up to par or there's a lot of repairs that need to be done. Instead of you getting your own contractor and paying that contractor, you can do a credit. You can credit the buyer $3,000, $5,000. You get a quote from the buyer, get a quote from your contractor, see how much the work is to be done. Figuring that estimate, you can maybe give the buyer a concessions, a seller credit to say, hey, look, you get a certain percentage or a certain number, and you can take that and we move forward on the transaction. When you close the escrow, this comes into play because that is taken out of your equity, out of your full sales price. So here, let's just say we credit the buyer $5,000 for repairs or for closing costs. We'll say for closing costs. In that aspect, it's not much. That's average. Depending on how much repairs a house needs to be done, you negotiate. Moving down the ladder, we got taxes. Everybody's going to pay taxes. Now, there's a very, very important loophole to this. And right now, our president, I'll speak on this a little bit, Biden has talked about taxing a 1031 exchange. This is a totally different topic. I'm just going to fill you guys in on that real quick. Typically, when you sell a house, you can do what is called a 1031 exchange, to where you're transferring the capital gains of that property and you're either purchasing something of equal value or larger to have a tax deferred move. You're not going to get any money from that. You're just going to reinvest it. There's no taxes taken out of that typically when you do a 1031 exchange. If you don't and you pull the money out, a single individual, one single person is given $250K. As of right now, it can change, but I'm telling you guys right now, May 18th, 2021, typically a single person gets tax deferred $250,000 of capital gains on their property and not have to pay taxes on it. Anything above that, they're going to pay taxes on. Okay? So just going back to this, this is just the taxes you pay on the sale of the property or whatever it is that is there. We're just going to go 1.25% just to throw a solid number out for you guys. And based on that, it's roughly about $7K. Again, we're just throwing some scenario figures out so you guys can kind of see what the spreadsheet looks like and how it kind of subtracts and what you get to your final number. Okay? HOA dues. This is really only for townhouses and condos, or if you're living in a single family home where there's some sort of association that you have to pay. To get a report, it's typically $100. Like when you're in escrow, the seller will typically pay for this. It's $100 to get the bylaws, the CC&Rs, the bylaws from the HOA association to give to the buyer. It's a disclosure that you have to give. It's about $100 for that. So we're going to note that, $100. And then the prepaids, typically $25, sometimes $50, whatever. But you're typically going to see about $25 and $100 expenses to pay for HOA situations there. Okay? Home warranty, you guys may or may not know that. This is just standard stuff. A home warranty is paid for by the seller as well, whoever you guys are selling in this case. And it's when a buyer is moving into a house, you typically pay 1 year. Only 1 year, anywhere from $500 to $600, where you as a seller give them a home warranty that ensures basic stuff, unless they're able to negotiate something otherwise. But it's electricals. Matter of fact, I will have that brochure attached. Old Republic Home Warranty is a great company that we use. I'll put that below. I have the guys attach that below so you guys can see that, see the different plans, because there's a lot of different plans too. But it's typically $500 for that. And it's super important actually. On the buyer side, it helps out a lot, and I'm talking about this one a lot because my parents, when they purchased about 3-4 years ago their first property, they moved in, everything was great. Home warranty covered the water heater. Water heater ended up going bad about a month in, somehow, some way. Home warranty came out, repaired it, couldn't fix it, repaired it, couldn't fix it. So they replaced it. They got a brand new water heater. About an $800 repair for $70 deductible. I think they paid the deductible 3 times. So let's just say 150 to 250. But they got an $800 water heater. So it really depends. Very beneficial for the buyer. Something that really benefits the buyer more than anything, not for the seller so much. But again, 500 to 600 bucks going into the expense sheet there. Surveys, this is not often that you see this. But different analysis, surveys, reports that you would pay for. I guess you could do different situations just based on what the inspection shows and things of that nature. But I won't dabble in that too much. This is the one that I would say is kind of a last resort. A realtor credit is something where you've exhausted all options in the escrow, and there's just a couple funds that are missing to close the transaction. Seller can't meet the buyer halfway. There's no agreement there. At that point, you just figure, okay, as a real estate agent, what could you do to support this transaction to make sure that it closes? Everyone is in a win-win situation. If you need to fork up a little bit of your commission, this is where this comes out. A commission credit or some sort of credit from your commission split, in this case, the $33,000, and you would just fork that up as a concession or a realtor credit. Okay, right now we're gonna say 0 because this is something, as a real estate agent, if you're a professional, you make sure you cross all your T's, dot all your I's, and you know everything that's going on in the escrow, so situations like that don't occur. They do occur, but again, if you could avoid this, by so means, why not? Following that, again, just to put everything into perspective, we're gonna do some calculations on the calculator. I broke it down a little bit. I got my handy dandy sheet here below where you can see it. But for $550,000, if we were to subtract the sales price of the home, $550K, minus what you owe on your first lien, this would be the total balance of your first and your second. In this case, we just have the first. That would equal $300K, right? Boom. I don't know if I went over closing costs. I didn't. But I'm going to give you guys this one real quick because this is important. As a seller and a buyer, you have certain closing costs you pay for, escrow, different fees, notary fees, whatever it is that you have with your specific transaction. But typically, we're going to go with anywhere from 2 to 3%. We'll just use a higher number just to give you a higher number. Typically, closing costs are about 2 to 3% of the price of the home. So if we're using 3% of 550, it's about, I'd say like 16 grand, something like that. 16,000 and some change. So we'll just use 16K would be for the closing cost. That would be, what are we looking at here? We're gonna pull our handy dandy calculator out, guys, because these are some big numbers over here for myself. 16 grand. Okay, 284 is what you're left with, right? Boom. From that, we're gonna continue to subtract because now we have to add in realtor commissions, the $5K in closing costs, the taxes that are deducted. The closing costs would fall in with the taxes in that case. But we'll add them in anyways just to make the number a little smaller. We'll go another 1.25 of 550. It's about 7 grand we said. So 284, we still got it here for you guys, minus 7,000 for the taxes, about 277. We're going to subtract now the closing cost and the commission together. It's 38,000, 33, which is 6%, and then the closing cost, which is another seller credit of 5, minus 38 equals 239. 239. See what we're missing. Just to get a quick recap, we got the sales price, we got the realtor fees, we got the 5K credit. We got the taxes deducted as well. HOA dues, about 150 bucks. We're not even gonna put that in there. $150. You got your warranty, 500. That's 750. And no credits or anything like that. We'll just say another 1,000, just to make it look nice. So you are a final number of 238,000 of net proceeds. Now, what does that look like in the final numbers? Again, if you take that single individual, one person owning the house, they're giving up to $250,000 of tax deferred or tax-free capital gains. You're at 238. So you would have no taxes to pay on this, actually, with the 250 being under the capital gains rule. Cool. So just to give you guys another perspective, if you guys are looking to sell your property and you want to get a little bit more information on what it would cost to sell, what the numbers would look like, if it's even worth your time to sell, and if you have enough to net and possibly invest elsewhere, DM us. This is a magical number right here, guys. And with the seller's market, this is very, very, very realistic. Everyone is selling their property at this point with $30,000, $40,000, $50,000, $60,000 above asking price. There's some people that are doing $100,000 over asking price. Of course, in certain areas, there's more than others, but it's insane, guys. 30 offers, you're getting maybe 30 showings a day if you're doing 15-minute intervals. So the buyer's market is crazy, which is increasing that for the sellers. So if you guys have thought about selling, are on the fence about selling, and would just like to get an analysis on what your property is worth, how much you could net, again, DM us, text me, DM me, comment, like, share this to anyone that you might think is considering that, because this is a great opportunity right now, guys. Take advantage of the market. Take advantage of getting this information out to your loved ones. And again, if you guys are interested, follow below. Thank you guys so much for all your help, all your love, all your positivity. I hope you find this well. Love you guys. Peace.